Okay, recording started. Cool. So immediately when you guys see this chart, what are we looking for first? Yeah, I'm good, Martin. Sorry, buddy. Right? So what do we see first? Right? Type it in the chat. What do we see immediately when we see this? There should be two things. Right? Right? We failed this low here. Okay? Leads to this high being weak. We blast through it. And what do we find? Some people are saying it. Good. Immediately your eyes go to here. Now we've already tapped into this once. Cool. Right? This area determines our bias. If we break this area, we're in at a minimum a short-term downtrend. Right? But we also have this area here that was broken after we formed our higher time frame double bottom. So it's feasible to suggest that this is a higher time frame move, and we can tell that obviously because of how violent the movement up was. It's got an agenda. There's no structure here on the 1 minute. It's not creating its own path on the way up. Why is that important? It's important because if this is the end of the downtrend here with failure, right, which is how we categorize that, then we're actually not looking for, is there doodles and whatnot on here? Right? We're not looking for shorts to come back in. What do we got here? None. Okay. So it'll be a little bit trickier than trading view, but we're not looking for something in here to trade us back down. That's possible if we get a failure, but I think the majority of errors that I see people doing in the private calls that I have, or at least during our stream, is people are trying to catch that big short back down without realizing what sort of weather we're in. Okay. So when we're forming an objective-based model, what we're looking at is where should the market go next and why. Structure is telling us what the market's doing, right? But narrative is telling us why it's doing it. For example, failing here tells us we're actually gearing up for another large move to the upside. Why? Because we're respecting SNDR that just broke out of a huge range, right? We took a structural high, it looks like, right? Or we're at least gearing up to do that on a higher time frame, if you consider this being a 4-hour high in this case, right? And if we're going to do that, we need to respect this area first. So we've tapped into it. Looks like we've got a little bit of a consolidation and pushed out of it. We've got a little bit of structure here. This is a lethargic movement upwards. So we could expect another push down potentially if we fail here. So let's go here. Right? If we fail here. Right? So our idea is, let's see what this zooms up. Right? If we fail here, oh, this is lovely. If we fail here, we come back down, we then liquidate here. If we sweep this on a 15-minute time frame, this is the sweep model that we traded. Right? Failing to go lower in a key point of interest. Ideally, we sweep the SNDR itself, fail here on a higher time frame, and then we're gone. And this trade would take us up above whatever weak highs are put in. Okay. So let's play along a little bit. We'll speed it up until about 6 o'clock. Sorry, 9 o'clock for market time. actually, let's just up it a little bit. Rather than sitting through, let's see where we get at 602. Okay, so we didn't actually trade up into here. We actually failed here. Why were we expecting that? Lethargic movement here. We don't have urgency. We have swings that are leading up to a rejection. We came back down. Cool. Right? What are you guys thinking right now? How are we looking? Let's zoom in a little bit. Right? We don't want to be going long here trying to get the highs broken. Equivalently, we don't want to be going short in here trying to catch 10, 15 points when we're expecting our higher time frames to go on a rocket ship. Right? Now it's 10 after 6 or 10 after 9 in the morning. Right? So majority of us will be sitting on our hands regardless. Either way, we're waiting for price to tell us one way or the other. Right? So we've got our high here. That was interesting. So I'm not looking for shorts. We'll probably take one here if it fails. That one didn't really look like it failed there. In which case, I'm definitely not interested. What I would need would be some sort of a snap here, trade back in and go after it's taken the liquidity, telling me it's going to fail. With the understanding that this has built liquidity on the downside. If it does this and just leaves, I'm not interested. $825 is an area I'd like to see some reaction to. If it fails here, we're liquidating all of this and we're not buying anywhere in here. Because this is now weak. We're expecting a higher time frame push. That doesn't mean we can't find 5 points in here, but it means that our probability is that we're waiting and looking for lower prices. Right? This very well could trade up into here and you get your 10. Right? You could also be involved in something like this. Right? So we're now at, oops. We'll slow this down a little bit. We're at 9:30, so obviously we're at open. We failed here, looks like. Nothing I want to be interested in, at least with this price action. That was a little weird. We closed here, opened here. That's like a 5-point jump. Right? We're looking at this SNDR. Is that even drawn properly? Suppose we could draw it like that's kind of refined down. I'm actually going to take this larger area here because I'm expecting it to be higher time frame. So we'll look at this there. Okay, so we're chopping around. I don't know if we took that low or not. Nope. That didn't really snap at all there, did it? There we go. So let's pause it here. Be honest with yourselves. How many people will be looking long right now? Right? Sitting right above an area of interest after we've currently failed. Right? Getting caught up in what's going on here. This swept down all of this here, which is good. Right? What we got here? Here's your 15-minute chart. Now, this is a protected low here. So we actually don't want this broken internally, but we are within a range as well. This low is weak, which is what we're kind of looking for here. But you can see on our chart here, we actually, I think, went over this one in private, I think with one person, now that I look at it. What we're looking at is if we fail here, which we're expecting because we've put in a valid high, assuming this bar closes like this, we want something swept, which is now failing to go lower. So everybody understand that the market here is telling us that it doesn't want to go higher just yet. This is interesting, zooming down on 1 minute on this. We'll probably even go a little bit lower.
Sorry, yeah, I can hear you. I just didn't want to talk over Bill if it was going to come through on both. You hear me? Hello?
Hey, you all right, Monkey?
Sorry, Bill. Yeah, cheers, mate.
Cool. Okay, so let's play this along. Right? We're not looking short to take the last 5 points. Our probability is looking for something to go up. And then getting involved as we're on the bullish side of it. So double bottom on that low, finally taking it. Patient, right? We're reading the order flow. Let's take it down to one times here. We're tapping into our area of interest. What have we got? Okay, that's a good reaction. Let's see if we get any sort of follow through. This was the early entry. If it's back down to here, then you're flat, right? Your first objective would be to trade above this, which is asking quite a bit of the market right now. That was good. So we're looking to sweep down into here. This is actually a larger zone. This was basically the low of that. So let's actually mark that out. If we close above that, we're good to go. Okay, if it comes back up, we're interested. Right, this is our SNDR sweep. If it goes through that candle, we're in. Right? Now, we're probably going to know if we're immediately right. Right? Our target should be the high of that candle there. With the idea that if we're sweeping down here and failing in our area of interest, right, we're dealing with trading back into the SNDR right now. We want this to continue. Our first target is to trade at a minimum back to here. If we get a strong reaction out of this low, this one here, and it just taps in, rejects, comes back down, then we take it off. Right? We now want this to form our smiley coming through this high. And if it does that, then we move to break even. At the very least, your stop should be below that low there. Right? So on the sweep model, we go, as I move back there, I shouldn't have moved my stop just yet. On the sweep model,
Target filled.
what do you mean target filled? What are you talking about? Get my annotations out of there. So Zoom mess it up. What we're looking at is once we get confirmation that this is manipulation, that's when you move your stop to the low. Well, yeah, I'll manually close it. Right? So you're in here, say, or wherever we are, 97.50, say here. Let's get rid of some of this. So 97.50, right? You're looking for other 10 points or 10 points. In this case, because of the narrative that we've got, that if we fail this SNDR area, we're actually going quite a bit higher very quickly. But how do we structure our trade? Our trade is structured that our first area or first thing that we're looking for is bullish price action when we're going long, bearish price action when we're going short. Right? As soon as we get that, and by get that, I mean that our sweep is based off of this being manipulation. That we're taking liquidity on the downside so that we can now finish our objective and move up. Right? So what does that mean? It means that we're looking for it to trade underneath here into our SNDR, ideally sweep it, forming our sweep model. We get our manipulation, it trades back through, we're long. And then as soon as we see it defended, now we move our stop to here. When we trade and close above this candle, ideally we'd be above this candle, we would now move to break even. Right? So your conservative target then is above the last structural candle that took us down. Right? So this is your first target, your liquidity. That's your conservative. That's when you're growing and building your accounts. And we'll probably have a few of these today. Right? So we'll go over this again and again. But what you're looking at is whereabouts. This was the last manipulation. This is all fodder. Right? So this is another stretch target above this high here. Let's go here. Come on. Right? So where would you want to be conservative on entry? Where would you enter if you misrecognize the initial candle sweep? You want to see a change in order flow. Right? With the understanding that this is a higher time frame zone, we want to see, some people will take a candlestick, candle structure shift entry here, not my style. I'm looking to see, do I get a pullback in and then a change in order flow that would give me a second entry to go. Why? Because now I'm able to risk off of the defense. Right? This is likely a higher time frame move. So failure here might take us back down. Right? We would put our stop below this low at this point. And this is how you catch monsters. Because now we're just trailing it up. Right? Next candle is going to open here in 25 seconds. If it opens here, puts in a low, trades higher, now our stop's there. And we'll just follow this up until we get to our target up here. Right? people are finally realizing that they're on the wrong side. We're up 41 points on very little drawdown, which is the power of the sweep. Can't get rid of this smiley. Where's my, there we go. Get rid of you. Right, so we took this high of this consolidation. We've had no hiccups at all yet. The first area we were expecting issue with actually just went right through it. Do we get out when we see some bearish price action? Right? A lot of you guys are, so let's just close that now. Right? This is probably a pullback that's going to be defended. I'm just going to illustrate catching sort of monsters. Right? And then we'll look for a possible re-entry. So this is a second idea, right? With the possibility that we actually trade back down into this prior range. Yeah, I mean, a lot of people would be out, you know, just in here. This is what we do on a daily basis, right? We take this high, rinse and repeat, rinse and repeat, rinse and repeat. Right? We got another few points out of it, I suppose. But wherever your target is, the key is that you guys are understanding what you need to see personally based off of your risk allowance, your sizing, your comfort levels, your experience. Some of you might still be in this and you're like, this thing's either going to take me out, break even, or it's going to hit my target. Some of you would be in here, out here, in here, out here, right? In here, out here, or something. I don't know. The way that I trade is I take confirmation entry at the point of reversal, and I have a conservative price target. If it fails to go below this candle, sweeping, then I'm targeting the high of that candle. Done. And I'm waiting for the next trade. And if I get something similar here, then guess what I'm doing? Right? So far, all we're doing is respecting this price action here. Another smiley. Right? Do they want to see a candle like that if you're short? Probably not. I'm not going to long this here right to here, but my expectation of this candle is a barbecue. Which is another thing I want to talk about. So when you're talking about objective-based trading, what you guys end up seeing when you're studying price action enough is you see both sides. You see, oh, it's failing here, so it should trade lower, but if it fails here, it should trade higher, and that's objective-based trading. And now you compare that with candlestick theory, where you're going, okay, this candle should have been a direct response to this buying, and all we found was strong buying instead of selling. We're going higher to expand to this high. Right? And then the next step after that is once you start seeing everything, do you want to be involved in everything? No, because that comes into probability. Right? What's the probability of us going a little bit lower from here? We just made a valid high. We just failed here. Trading back down into where? This. Does that mean we want to be short? No. No, it doesn't. Right? What's the response of this candle? Sideways. Likely going higher again. We'll see. Speed it up a little bit. How many people will be looking short right now? Where's your target? This low? Could be. Right? Hoping for that 10 points before it goes on a rocket ship. Would we be long from in here? Where's our value? Where's our money? Our money's in the failure to go lower. Right? Lethargic movement, trading down, leading to a rejection. So if we sweep in here, that would be excellent. Alternatively, we could just sweep that low. We know this is important because that's where the buying stepped in. Right, so our protected high for John that just mentioned it, yes, we're looking at that. Right? Dangerous. And we're long. Why are we long from there? Get up there. Right? My stops immediately now break even. SNDR fractal. That's right. Is this too conservative for you guys? Right? Why are we long from here? Those of you guys that are looking, we're looking at this. How important is this zone? Target filled. Oh my God, I'm having a hell of a time with NinjaTrader. We're looking at this. Bang. Right? Got the tap into we wanted. Swept here, which we were looking for. I've got a lot of nonsense on this chart. I do apologize. Right? Conservative target, but no reason to get out at all. We could be break even right now. We're looking at this manipulation below here. Why are we expecting lower? We failed higher. This is the market screaming at you. I'm not ready yet. I've got to go down. I've got more people to pick up on my way. Right? What does it feel like? It feels like it's leading to a rejection, but it's also going lower. What makes that SNDR versus the one above more important? You talking about this one? Or you talking about this one? That's right. Right? We were in a sharp downtrend. This was your climactic area that shoved us down. This is where we stopped right before this high and broke above. So this is a target where people were exchanging their positions short for long. Right? This is a swing in quite a few market structure disciplines. And you'll notice it actually did deliver a movement out of the mitigation area of it that didn't go higher. This low's job was to trade back up to here to facilitate more movement lower. Right? But if you're looking at this area as an SNDR, this is just continuation. This actually broke the downtrend. So this is quite a bit stronger. This is a protected low on the 1 minute. That's correct. right? Because this became a valid high when this candle closed underneath this candle, this one here. So this was a protected low on the 1 minute, right? So now we're getting 15-minute failure from what we saw earlier, right? What happened here? This wasn't a protected low. Well, I suppose it was actually internally, but we're looking at this as a range. Sweeping and failing here takes us above this high because this high is now weak. Trading in ranges is very tricky for people, right? What I look at is SNDR to SNDR. So my major narrative is that we held here. Ergo, I'm not looking for shorts back in, even if they give me 10, 15, 20 points. I'm looking for the high probability trade, which is sweeping and failing when I have lethargic price action leading into it. Does that make sense to everybody? Cool. That's right. We're long. So the market is going to try its very best to elicit emotion out of everybody, right? Who can attest to this in your live trading, right? What do we usually get when we have a major bullish day? We usually get violent movement down, and then what happens to that candle? Closes here. Why? It's eliciting emotion from you and everybody else in the market, right? It's trying to whisper that it wants to go down, and it does. 10 points for institutions to get involved. Let's take it out high off. Up we go. Where are we at? We're at 10 o'clock. One of the few things that I learned from Dave Teaches is when to expect accumulation. Type it in the chat if you guys are aware of it. After a higher time frame has been taken, it's correct. Right? So we're looking at this high here, which was pretty structural. We took this week high, we accumulated here. This is a higher time frame what? SNDR. So it's viable to expect a strong movement out of here. And now we're looking for another move out of it. But we would expect a range to come in after we take it, as profit taking ensues and everything else. Right? We've actually just traded back into the range into where? This area here. You'll notice I don't mark out swings on my chart. I look for areas responsible for something. Right? This area was responsible for something. This low was responsible for something. It didn't take the high. I expected to get liquidated. But a strong price action movement came out of it. There was urgency there. Right? You're looking at this candle here that was responsible for something. We then liquidated the high. We traded back in, but I look for areas responsible for stuff. So we're just sitting on our hands right now. I'm sure there's 100 scalps in here. Speed this up a little bit. What are you guys thinking right now? No, I'm not considering a short. Why am I not considering a short? We just failed our main reason to even consider shorts. Right? This area fails, we're short for the majority of today, or at the very least, we're taking longs and shorts inside of a range. This holds, this SNDR that was responsible for a higher time frame. This is monster. We're expecting something maybe in here, right? If you're looking for one of the things I learned from Al Brooks was the concept of a measured move. So what you're looking at is where's our consolidation about here? I would say about there actually, right? Your measured move would probably be to the high of this candle here that failed. We're looking for this to cap. And this isn't what I trade on live stream, by the way. This is just anecdotal. If we're going to expect a reaction to come back into the range, it's probably going to come from a measured move target. And trading back in would then give us cause to go long. But we're looking for longs either back in here or on major failure up in here. Major failure for me would look at failure to go underneath structural candles. Right? This is our last structural bull bar, but I'm looking at this one that has a liquidity underneath it. Right? Either way, we're probably looking at trading back into this consolidation here. Right? So what you guys see is you're looking at what's its objective here? How willing is it to go lower? You see something like this, are you really seeing urgency from the bearish side of the market? Not really. Right? Would you rather be fighting for 3 minutes for 10 points? Or would you rather be getting involved on rejection that gives you 10 points in 30 seconds? Stop fighting the trend. Your bottom line will thank you. Right? So didn't trade below here, attacked this area. Cool. Nothing I'm interested in. Trading up, we're probably going to trade back into that measured move area that we were talking about. We're kicking ourselves for not holding our longs, aren't we? All depends on your guys' risk tolerance. All right, so strong follow through. See where that bar closes. Cool. There's this coming in. Cool. So if we speed that down, a sweep of that would have been something interesting. If you held it, how would you have managed it? This one I would have been looking for failure underneath. And that my target would have been this high. I can't suggest that I would be holding through a rejection of that nature. Obviously, in hindsight, that would have been beautiful, but there's no way that I would have held through a 30-point melt. I would have been looking in here as where the pressure's coming from. Are we trying to rally and failing? Not really. We've got one candle with a wick all the pressure is pointing upwards. Right, so here we go, trading into our area. We didn't consider a sweep in here because it didn't actually sweep there. Right, we had some velocity coming in, cool. People are getting paid on the short side, awesome. Right, where are we considering a long from? Let's zoom it down and we'll pause this. So let's see it in the chat. Whereabouts are we looking long from? We're chopping back into the top of the range here. Right? Some people are looking at SNDR. Where would you draw it from? You're going to take this entire candle. You're going to look at this here. Whereabouts are you drawing it from? Right? Yeah. Right? Let's see if we can load it. All right, let's zoom in. Let's zoom in. All right, so where's our actual SNDR here? Confusing area, that's right. We can talk about concepts, and you'll find this on FinTwit, you'll find this in other Discord rooms, you'll find this everywhere. People will throw out concepts like price is fractal. Okay, explain that to me. Well, right? So when we say SNDR, cool. Right? When we say SNDR, that's awesome. But what exactly are you looking for with SNDR? Right? So we have our downtrend here. This area was responsible for breaking that downtrend. Right? We traded down sideways here, swept, traded up, consolidation, broke, traded back into it, swept it. Look familiar? That happened on our higher time frame. We've taken 2 trades from it already. Right? We're now looking at it on a lower time frame. That's what I mean by price is fractal. This happened on our 1 minute here, which we took. It happened on the 15-minute, which we also took on that sweep there. Swept SNDR long, swept SNDR long. Now sweeping a 15-second SNDR on our way long. Right? So again, let's back up here. Whereabouts are we looking for our SNDR? You've got this area that broke the high. You've got your little fractal right underneath the high itself. Right? So what we're actually looking at is we're kind of looking at this area here already got respected. Cool. I'm looking at the high of this candle to the low here. Because this actually led to failure. It traded back down. This is where buying came in. So you got a lower time frame movement here. I actually like this movement down. Yeah. Stotts has got this area here. That's also valid. That's also valid. This is kind of an order block, I suppose. It'd probably be better to draw it from here. Right? And we can refine it down to this. All right, we traded higher, we traded back, and then strong movement. Right? With the idea that I would also accept if it traded into here a little bit more, into this bearish candle that was clearly buying. How do we know it was clearly buying on that candle? Well, I mean, we went on a 30-point rocket ship from that low. Right? So this area here, from here to here, lines up with this fractal that we've drawn out. So when you're looking at confluence and we're looking for an entry, let's see how this plays out. Right? And now it's what do we want to see to get involved? Ideally, a change in order flow. Because we're expecting a higher time frame movement out of this zone. Change in order flow would do that for us. We all on board? Or do we have questions? Is this good, or are we getting a little bit more confused, guys?
Good, or are we getting a little bit more confused?
Cool. Okay, so let's get another trade in. I think we'll be expecting one here. Okay, that's a nice little push. Tapping back into here. Is it going to leave without us? Just a little confused on how to identify SNDR. It's not your fault. So you're looking at SNDR, the last down move in the zone. Not necessarily. It's the area responsible for breaking the zone. Or breaking structure, I should say. So we weigh SNDR as being, and by the way, we're looking for a trade ideally back into here right now, because we've now got our change in order flow that's occurred on a lower time frame. We'll stay on the 15-second for a bit, just for you scalpers in here. All right, so my eyes are on this here. If we get back into there, if we trade significantly strong out of this, then I'm going to hit it as well. Okay, cool, and long. Let's see if we get wrecked. All right. Right, so my stop's going to be above this, or my target, I should say. So I want to see it trade into here. Failure from there would trade us back down into here. Right, so my stop's going to be moved up now. We're expecting our speed bump here. Might trade back down to the open of these candles. That's why I'm not moving my stop just yet. Right, we're looking for, what are we looking for, right? You're looking for signs of it attempting to rally and failing in key points of interest, right? You're not looking at these sharp, or not even sharp, these down moves are just it reacting to areas that push price down, which is what we expect. Similarly to why we had to trade back down to this area in the first place, this unmitigated zone that just drove us higher. And what does this look like? This is your flip. All right, so what we're looking at is, can we close below here? Cool, okay. Valid high came in. Trading back down to this low. Consolidation means that I'm still looking at this high, but it's also possible that after we trade back up, that we go a little bit lower. Right, so now if we're going to go, I'm actually expecting it to trade probably into the middle of here. Let's go here, right? And I'm looking for the midpoint of this. All right, so let's go here. Right. This was for everybody, so this will be posted for everybody. Martin, I throw some. Right? So yes, where would you look to add? You've got internal structure forming now. We flipped. You got an internal range here. You're looking for failure to go lower, and that's when you would be able to deal with that. I'll post the YouTube channel later on. Sure. We just created a new one since we moved over from our other server. So it has a few videos on there, but there's gonna be a lot of content posted to there for the community as well. So be honest, who's sweating in this long right now? Be real. Be real. That's not a bad thing. Right? The rational thing to do when you're up in profit is to take it off. That's what the rational mind does. It doesn't like being uncomfortable. What you need is to have a clear, concise reason to get out of your trade. Who's winning right now? Right? What's the market trying to do? Is it trying to sell off? We've got this liquidity building here. We might take them, trade back down into this. This is your lower time frame SNDR, isn't it? Consider break even after we get a closure above here. So ideally, we should actually be here right now. Right? So what I'm looking for is, if I'm in on a sweep, I want to see bullish price action, which confirms to me that the manipulation has happened. And then my stop's below the manipulation. We shouldn't get down there. Right? After I get a closure above my structural candle, if I'm actually holding for a swing, then my stop goes to break even when structure has already put in a protected low internally.
Target filled.
Target filled. Are we too conservative? Probably. Can we expect this high to go? Probably. This would be the area of interest that would trade back down and then possibly go up. Right? That doesn't mean we need to be looking for short here. Just because we might get a trade back down. Yes, you can be like water, right? Short, long, whatever, right? But until you're at that point, I think we can all agree we'd like to get some payouts. How do we do that? You trade the A plus of the A plus. SNDR sweeps, changes in order flow with narrative, take your trade to your conservative targets, and do it again and again and again and again. Right? Narrative. Focus on narrative and structure. Right? Stop trying to take these shorts. Understand whereabouts you are in the market. Yes. This is a 15-second example. And I don't trade live on the 15-second. I'm just trying to provide a bit of a wide net on getting people to understand that the 15-second, the 1 minute, the 15-minute, the 5-minute, the 3-minute, the hourly, whatever, they all follow the exact same rules. And they trade the exact same way. Right? We would have taken this on the 1 minute the exact same way. Right? And you guys will actually see, let's actually switch back from the 15-second now. Right? What do we see here? Traded down, right? Actually traded down through, traded up, above these highs, back in, gone. We're still looking for this area of interest. Right? Pretty good exit now that we're looking at it. Don't we feel like rock stars? Yeah, that is an SMDR. You're right. As usual, yeah, no kidding. We're sitting on our hands. So, question for the chat. See who's done their homework. What's going on here if we break above and fail? It's sitting right above our point of interest. Drama. Drama, my guy. Right? We've taken a structural high. As you guys said earlier correctly, we expect a range. Right? So our thesis right now is being proven correctly where we're expecting this high to get taken. We're defending well here. We're in a higher time frame push up. Let's speed it up a little bit. See if we're right. We might get a body closure up here. But what will end up happening if we're going to fail here to trade back lower is we get a body closure up here. We get maybe 1 or 2 candles of sideways price action. And then we trade lower. We actually close here, which forms what on our 15-minute time frame? A wick. Right? Here's that second long we were talking about. I should have left all these doodles and whatnot on there, right? Failure here takes us where? Back down to consolidation. Failure here takes us where? Above that high. Objective-based trading. Very clean price action today. Okay. So we just took this high. Anybody looking short? To trade back down to here? Maybe. What would you need to see if you were? Or are we just sitting on our hands with high probability waiting for longs? Many different ways to trade. Sweeping here, cool. Okay. Sitting on hand for long, sitting on hand for long. So let's pause it here for a sec. Get rid of some of this stuff. We'll do a little narrative building exercise, similarly to what we did here. So when you guys are evaluating and you're looking at, okay, I want to go long, let's say, I don't know, however long that was. So if we say this low, come on, this low to this low, right? Or that high, sorry. Let's go here. So we're expecting, I don't know, somewhere around here, because Fibonacci works for price, but it also works for time. Measured moves for time. It took X amount of time to go from here to here. It's going to take X amount of time to go from here to here. Okay. Probably a lot more important things to backtest than that, but just anecdotally for here. So we're looking at somewhere in here for our target if we're going to get down there. Okay. We're looking to now study and identify how we're going to get down here. Are we just going to go on a rocket ship? Are we going to stair step down there? Or are we going to consolidate and then dip? What's our more likely scenario? Similarly to how we traded up, right? We traded up into an area of interest, back down, and then left. Right? So the objective of this high, if it's going to fail, where is its first target? It's going to go back down to this consolidation, right? You have your lower time frame SNDR here. Cool. Right? We've just swept that. Would we expect that? SNDR at the top of the range if we're expecting lower prices? Yes. Yes, we would. Right? This might give a few points in here of that sweep of this area. Sweep, trade back up, and then possibly failing. If it doesn't fail and it goes above this high, now we're probably waiting a little bit longer to trade back into here. Right? So immediately, if we don't see failure off of this sweep, in terms of like somewhere in here, that thesis is out the window. Now we reevaluate. Okay. If we do see failure here, then essentially what we're looking at is this high, trading down, liquidating the SNDR, trading back up. We're now looking to trade lower again to where? Probably attacking this low, these open, right? We know this is lower time frame manipulation. So somewhere in here would then trade back up to where? To that zone, right? Failing in this zone would likely be some sort of consolidation. Why? Because we're exchanging on a short term our positions, right? And then you would see expansion lower into our area of interest, right? So let's see how that thesis sort of plays out. This is also when to expect sort of sideways price action. When we're accumulating, we then manipulate and then go higher. Why? Because that's exactly what we did here, didn't we? See what we got here. Making a fool out of me so far, isn't it? Yep, could be a double bottom for sure, Paul. Absolutely. I would definitely be looking for some sort of a double bottom or change in order flow here or both. How many scalpers we got in here? Anybody interested in going short if we get some sort of failure flip into here? If you're short, where is your stop? Above this candle? Above this high? How nervous are you right now? Mm-hmm. You've got a valid high as of this candle here. We're now trading back in. We can all agree we're still bullish in terms of structure. Valid high and valid low. So what does that tell you in the short term? Range. Range. I love you guys. You guys are awesome. So, for those of you that enjoy pain, what do you need to see in order to actually look short in the interim? If you are looking short to trade back into here, and you have this compulsive need to be in the market. I threw shorts out the window. Okay. Yep. The only reason we would consider a short here is because we have a key area of interest and we're failing here. So we have two confluences of objective-based trading. The failure here being one, market telling you it doesn't want to go higher just yet. And now we can identify area to get involved here. And if this fails, now we're potentially looking short. We'll get into that in a second. But you can agree that one, right? We've barely traded back into the range. 1, 2, right? you'll notice that we didn't trade back down into here after. We've already got our double bottom in this. So for us to have our higher time frame double bottom, we would actually need to trade back down into here, which would then lead to major expansion. So why is this important? It's important because for us to identify short, and I think you guys understand kind of what we're talking about in terms of the objective, if here, then here. So I'll delete that off. If we fail in here, and essentially that's the market telling us on a lower time frame, the exact same thing. Everybody understand that? What it's doing here is we're now looking for it to be happening here. Yes? Good. Right? Why is that also important? Regardless if you're considering a short or not. If you're long from in here expecting higher for whatever reason, say that this candle closed here, we actually had a body closure above there and you're looking long, but you see failure here to go higher, no bueno. Because you have an objective lower and the market's now whispering to you its little secrets. Let's see what we get. Right? Body closure above here. We're now looking for this. We're expecting higher prices. Right? We've got a strong push out of this. We've now failed to take this to go below here. Here's our trade up higher. Cool. Bang. Right? Stop probably immediately above that high and target this week low. See how its velocity is coming in? Now we're targeting here. We might have to sit in this for a minute, but I like the velocity. Let's see if we can get this low. I don't want to see a sweet failure of this. Okay.
Target filled.
Still think I'm on the right side, but not a fan of that. Why are we being conservative? Even though we have a target here, right? Because we're in a higher time frame push. We're taking our profit as we get it. Right? We can hold our longs for a little bit more confluence. That doesn't mean that I'm going long from here, but it means that there was something very specific that I wanted to see. And if I don't see it, I'm not willing to hold through drawdown. Right? This is doing exactly, well, not exactly. This is doing quite a bit on the short side that I do like. Who thinks I'm out way too early? Mm-hmm. Yeah, I know you'd still be in this, Paul, you legend. No smiley face. Yeah, okay. Who still thinks I'm out too early? Well defended. would have closed out as well. Okay. I really like that shove down. Really like that. I was expecting a little bit more out of that. That doesn't mean that we can't chop around in here and then fail. According to our plan, we are expecting consolidation. So my fallacy was that we drew out this. This, right? Probably not there. I think we drew it here and then consolidation and then probably lower. Right. So I should have been more willing to hold through this given the consolidation. But quite honestly, shorting into a higher time frame move isn't my cup of tea. Does it feel like we've been at this for an hour? Or is time flying because we're having so much fun? Time flying. Appreciate all you guys. Right? So now this is important. This is important because you get ranges within ranges. Right? So we mention this on stream all the time. Follow the last manipulation. So people will look to short in here and they'll look to take this low with the understanding that we're in a range. Right? Or you can look at this area here that might be interested, right? To go short from whatever. We've got the midpoint of, midpoint of this, right? Also equivalent, right? So theoretically, based off of everything that we've looked at, failure here does what to this high? It's the market telling us it wants to go higher. But longing here to do this is fallacy because you're not taking into account what the market's objective is. Right? So going long here, is that viable for a scalp? Possibly. We're still waiting for lower, but your target is this. And anything else, no bueno. Right? We're expecting that high. Why? Bang. Because this failed here. We're in a range here. Right? And just to be facetious, based off of directional movement only, this is a trade I would never take. I'm just illustrating failure, failure, failure. Right? This is where we get wrecked. Beauty trade, yeah. Do not do this at home. Right? We're looking for a long. Right? Do not short in the middle of a range. You want to be involved here or you want to be involved here. But your targets are conservative one way or the other. Right? Let's draw this over. Get over there. I don't know exactly where that low is, but we'll leave it around there. Are there a number of failures you want to see? No. No. So I do have I've started writing a structure for trading in ranges for you guys. And essentially what you're looking for in trading in ranges is and those of you that have studied ICT will understand this as well. You're looking for order blocks to form at the midpoint. You're looking for range expansion candlesticks, which is going to be part of the candlestick number 2 video, which we'll level up with. That might not be in July. That might be in August, just because, quite honestly, there's about 12 things on my plate in terms of content that I want to do for you guys. We'll be focusing on narrative this week. So consider when we were ready to expand from here, right? You're looking at, right, trading sideways, trades up. We got wicks coming on here, trades down. What happens to this? You're looking for a defense of that candle where it's unwilling to go lower in that small range here, right? Otherwise, you're range bound. Okay. When we're looking at, let's find another example here. If we can get a good range, this is all overnight, so it probably won't give us much. Yeah, probably not. Right. So we'll just have to use our current example. What you're looking for is your expectation within this range here. Your expectation of failing lower will go higher. Failing lower goes higher, right? Failing higher goes lower, right? That's the concept of weak highs and weak lows that we all pretty much know at this point, right? Failure here means that this high is weak, we take it. Failure here means this low is weak, we take it. So typically what you're looking for is you're looking for order blocks that are formed after failure on one side, and now we have an unwillingness here to go lower, characterized by some sort of a candle like this. You might see something like this, whatever. Either way, you're looking for defense of the midpoint of the range, which is now leading to higher or lower prices. Everybody kind of follow that? You can study this as well in your backtesting and your study of ranges if you like. But you'll see that typically before expansion, you will see something like that occur. That's how you know to get the hell out if you're on the wrong side. Order blocks essentially are you get selling pressure that occurs in the market where institutions are actually buying it. And you can tell that it was buying because you get a body closure above it, right? Consider this candle here as a perfect one. I can guarantee you art would have been in on this because of that candle alone, right? We get a body closure above it, so we know that it was an order block. Boom. Right? So let's keep playing this. See if we get down to our area of interest, and then I'll probably let you guys have your what a silly concept. I'll probably call this then, and we'll see how this long plays out. But what we'll do is we'll pause it periodically into this move, and we'll review exactly what's going on, and you guys can look and see with the expectation of going long in here when you guys would be long. Would we be long right now? We've swept our low here. Let's get rid of some of this. Right, midpoint of 51, whatever the heck that is, let's call it. Get rid of that. Okay. Beautiful, sweet. Anybody else? If you're not involved, does this look valid? Even if you're not involved, is it valid for our model? Or what do you need to see otherwise? I would go long here, okay? I would FOMO in, fair. Right above a zone, okay? How accurate are we with this here? Right? This is a very ambiguous SNDR that we had to zoom in on. Right? So in theory, we're looking at some sort of failure underneath this low, which is now failed. And we've zoomed in, we see this here. Ideally, we wanted something in here. But are we married to this zone? Is it that clear? Not necessarily. Right? I'd long that sweep that just occurred. Okay. Okay, that's cool. If we had a very clear-cut SNDR, I'd be more comfortable waiting for that alone. Right? I'm not currently long just yet. And the reason is because we've got some consolidation here. We got a very nice reaction to this. I need to see a little bit more because I'm expecting the market to trade above here right now. We have 20 seconds until this bar closes. More confirmation. Okay, so let's play it another 40 seconds or 30 seconds or whatever. Everybody who's in on the sweeps looking pretty good right now, aren't they? Okay. How are we looking now? Break even now? Okay. This is manipulation. Your break even when we trade above this. Our stop's still here. If you guys are in on this sweep. Ideally, you don't want it to come below here. If this is going to occur a flip, actually that didn't really do it, right? So let's zoom in on what you guys are seeing right now and what I'm looking at. Right? So beautiful tap into here. Right? Put in a valid low on our 15-second. This is our area that we're looking to flip. Which is why we're not break even just yet. We're not out of the woods. This is still this. Everybody understand that? It looks beautiful on the 1 minute, but we have to understand what's going on in our lower time frame. Right now, what we're doing on our current time frame is doing this. So our expectation is actually right now, even with this has got to trade above this candle. This has got to trade above this candle. So we'll see what we get here. Oh dear. Hold on to your ass. Sweet model is in the Discord, Jason. Hasn't tapped into the imbalance above yet. We're actually, by the way, if this imbalance gets touched after we fail here, we're not looking at this imbalance being significant at all. We're actually expecting that to get liquidated. Because this will be a smaller time frame imbalance after we're trading into our higher time frame point of interest. So our objective would be done, and we're looking for rocket ship. Anybody long yet? Or still long? How are we feeling here, lads? Those of you guys that moved to break even, you guys are dealing with all kinds of emotions. Aren't we? Right? We've just traded up. What is this telling us? It tells us it needs to go lower. We now have selling pressure in here. We're not out of the woods yet, are we? This SNDR is looking pretty right. We're spending a lot of time here because this is extremely important. Exactly. We might be on the right side, but if we're early, we're wrong. We don't want to get stopped out below here and then miss the trade. At the same time, we don't want it to trade down here if we're wrong and then we blow accounts. Right? We don't want to be married to a bias. So we're seeing a nice price action here. We're failing above here, which we can see on our lower time frame. Still this valid low here. Strong defense. Right? What we're trying to avoid by this exercise is we're trying to avoid long out for break even or a loss, long out for break even or a loss, short, and then we get our faces ripped off. You know, a couple years ago, that was me. I've been there. Right? So one of the hallmarks that I teach with candlesticks is we want to see price attempting to do something and failing to do it. I call it a failure to fail. It's something I still trade to this day anecdotally. It's the only part of my system that's discretionary. Right? What do I mean by that? I mean that the market attempts to fail and it can't. Right? The response of this candle needed to be bearish and it wasn't. So what's our expectation of the next candle? We're going to look for the same thing in here. This happens all the time. The expectation of this candle for anybody going long off this was a body closure up in here. It failed to do so. Bang. Okay. So our expectation right now, as you guys are all seeing in the chat, is we're looking for this low to get taken. If it takes it, and we sweep it, the expectation of the next candle would be a rocket. Right? If we don't take it and we fail to fail here and we get some sort of a body closure up in here, the expectation would be a tap in for our flip and a rocket. Notice how we're only looking for rocket ships. Why? Narrative. Narrative and structure. It's telling us this key low was responsible for a lot of price action and we're failing here. At the very least, people that are shorting are very nervous in here. You got 10 seconds on this candle and we'll speed it or we'll slow it down to 1 times. Cool. Are we expecting this low to go? Yep. Is this the location that we want to go long in? Yep. Are we early if we long here? Very likely. But I'd rather pay for confirmation and stay in the trade. So if we sweep this low, I'm in. Otherwise, I'm waiting. What do we got? That double bottom? Rocket ship because we're tapping into our prior range. We're sweeping and failing a key low inside of a range here. This will be our higher time frame double bottom. Whoop. What are we looking for? Are we late? Maybe a tap back in if we're lucky. Let's play it along, see if we can get involved. This is exactly what you want to see for expansion. Okay, looking for it to trade through this candle now. That open would get me involved. Some of you guys are probably in right now off of that 50% mitigation. I want to be in on the right side of the trend. This is definitely pushing up. Now my stop's here. Right? At a minimum, we're looking for this. At a minimum. And by the way, how fast do we expect it to take this if we're right? Right? Body closure above here, I go to break even. Right? Where's our one possible hiccup that we're looking at here? This area here. Possibly the midpoint of the zone, but certainly here. Right? Tapping into it now, cool. So we're not worried about a few points being moved down. We're worried to see, do we trade above here and get annihilated back down? So don't sweat the small stuff when you're in correctly. Even a late entry like this. I'm like 6 points higher than Tom and Mike you'd be in probably. All right, we're just going to follow our lows up. Follow our lows up. If we start getting more of a rocket ship coming out of this, then I'm going to move it to here. $19,900, baby. Okay. Speed this up a little bit. How happy are we right now? Right, we're seeing we're seeing acceleration. I'm going to move it a little bit higher. You know what? Actually, do you guys want to see how we manage a swing trading position rather than just scalps? where we're expecting to come down, and now we're looking to add an extra. Would that be some good value for you guys? Something we don't really do a lot of, don't we? Cool. Okay, so let's throw our target up. God knows where. Let's say we want a measured move from here. I don't have the projections on here, so you'll have to forgive me. And we'll do this pretty quick because I've kept you guys quite a bit. So measured move target way up here. Right? We're looking for nearly 100-point banger. Okay. So let's get rid of this now. So what we're going to do is we're going to project whereabouts we're looking for the trade to go to. We're going to project whereabouts we expect the trade to retrace back from. And we're going to identify on this trade whereabouts we expect to be wrong. Right? And for that, we're going to use SNDR. We're going to use the swings that are created on the way. We're not going to follow it with lows because we're actually looking to take a swing trade here rather than just allow a good entry to run as far as it could. Okay. So first area of interest, obviously, right? Our conservative target. We're looking at this area here, our swing internally, right? So 85, not 85.14, but call it 85.25. The midpoint of this zone, which is unmitigated so far, we would expect a bump from here, right? So let's say here, and then trade back down to where, right? Probably into this range. So we could expect if this candle closes up here, that we have a lower time frame SNDR here, right? Ideally, we've got a stretch target of this for the shorts, that liquidity there, which might possibly be tapped into. So I don't really want to see that, but we'll see how violent this movement back down into the range is. But either way, we're looking at this high for sure. But this would tap back into ideally this zone. If this zone holds and we get a flip or a shove out of here, we add in here. Call it 77 or whatever that ends up being. Okay. And then we'll take that contract off here rather than letting our risk just accumulate and shoving for 100 points, whatever it is. Okay. Now, this being a high, we would expect if we take it, we tap back in to the SNDR that's formed here. And if we get a move out of this, similar to what we're looking at here, this would be an area where we would either add or whatever else on our higher time frame shove. But regardless, we're looking at internal structure forming. And if we get a flip out of it that doesn't sweep, this is where I'd be looking to either mitigate my position or potentially close it. Right? I don't want to see a bearish flip the other way. Is everybody on board with that? You guys understand? Cool. So we'll leave that up. We'll see what this looks like. Okay, and we'll walk through it together as well. What are we at? 10 o'clock? Okay, so let's speed this up a little bit. 10 o'clock my time, 1 o'clock in the afternoon. Okay, so cool. We've now officially got an SNDR here. We got a body closure above. We're trading back in. We want to see this hold. Beautiful, right? Trading into the midpoint of this range. We're expecting a reaction out of it. If we don't, then cool, right? We're just going to go on a rocket ship all the way through. Right, we've got this high here, which is important, 96. Okay, strong movement down. Low of that zone is here. Right, we're bouncing around 5, 10 points at a time. Nice little sweep into here. Cool. Let's slow this down. We might have an adding opportunity here. Okay, so nice body closure. I'm going to buy more there. Right, so sweeping down into our area of interest. We failed underneath this candle. Right, move all the drawings to the side. So failing underneath here, cool. Looking for this to get taken now, or we're going to take one off. 901.
Target filled.
Take one off there, cool. Move that underneath this. God. Get rid of some of that nonsense. Right, so this trading back down, we need to see this area hold, specifically whereabouts. We need to see this area here, this SNDR. Right, where's my drawing? Quick. This area here. Right, if we get a sweep of it, cool. Yeah, I mean, disclaimer, adding to a losing position is how you blow up accounts. Anybody that's educating, that's adding to losing positions is going to lead to account destruction, period. Right? You have to be a phenomenal trader to have that as part of your strategy consistently. You'll notice that I never, ever do that, period. I would add if this comes above here now with the expectation of a smiley. If it comes back down to the open of this, I'm going to add. Okay. Right. And now I stopped below here. And I'm looking for large movement up. We've got a reaction out of this area of interest. We've got our bottoming pattern. Right? What's our expectation of this next candle now? Are we entertained? Like, we fired up here? Like, my goodness, this gets me excited, this kind of stuff. Look at this. Higher time frame move. Woo. Pack your bags. Ooh, that's nice. That's a nice little failure going in there. Might have to tap that imbalance. If it does, this would be you imbalance traders. Right? Third candle imbalance tap. Boom. If we can't close above, what would be your expectation? My expectation is that we had an imbalance formed here. If it disrespects that, I'm gone. How are we looking? Do we still have our target up there? Oh, yeah. Right. And that's just price delivery. If we're forming imbalances and we are failing them in the short term, then that's a major piece of price action that I like to. I'm expecting a movement back down into here. Ideally, this SNDR maybe. I need to see, this is, I mean, yeah. All right, so traded below that candle there. We've got this here. right? What I'm looking for now is the market attempting to fail and failing to do that. So I want to see major signs of strength. For example, if this candle closes bullish, then I put my stop below that. Cool. Right? So what you're looking at is the market attempting to sell off. These are lower time frame swings, right? They're not structural swings. Many disciplines will be looking for, bear bars that close underneath, whatever else. Cool, right? What we're looking at is a little bit more discretionary, where we're looking at the market attempting to rally or attempting to fail to do something. And that's where we can put a little bit of trust behind it, because if the market's attempting to sell off on this candle and we actually close here, now we can trust the buying that came in because they still have their higher time frame agenda. So let's see if we are getting a little bit too greedy on this. Right? So again, we're looking at this movement here. Move it to here now. Okay. This is a strong movement. We need some major defense of this here. Sweeping here, I'm still in. Otherwise, I'm probably looking to take one off. Right? That's a nice price action that came in, being well defended. You'll find these order blocks form as they're taking their profits or exchanging. Right? So I need to see this low defended. If not, then I'm gone. Pretty good defense. I don't want to trade below here now. Smiley. Come on, NASDAQ. Make me look good for the group. Are we nervous? Are we having fun? Get going. What's our expectation if we do fail here? We're looking for higher time frame failure, which would also get me out. Right? Don't do me like that. Don't do me like that. Pretty decent failure. Might get taken out here. Yep. There we go. Oh, sad times, sad times, sad times. But we'll see. Let's play a few more bars and see if we actually just sweep this low and continue higher or not. Either way, I think we're quite happy with that trade. The key with it obviously is our narrative and our structure. Not necessarily the entry, right? We're looking at why we're getting involved. Could be 2K, could be 200, could be 20 bucks, right? I prefer process over outcome, right? Same process will get trades where we take that, whatever, 10 points here, 10 points there, whatever it is, right? Or 50 points, whatever. right? What's our expectation right now? Where's our last manipulation? Zoom, zoom, zoom. Needs straight above here, otherwise we're going lower. Right? Lethargic movement down, ideally leading for higher. You can put left on 15. 15 what? Minutes? 15 seconds? Sure. So look. Yeah. Right. So we got this high here, definitely this high here. Completed its pullback a little bit. And we'll see. Let's pause it here. So a grand total of, I'll put this snip in the chat just for our work here. What was it? June. What are we, 25th? We got here. Snip, snip, snip. Oh my God, stupid Zoom. Come on. There we go. So nice bit of work for everybody. Not too shabby. 8 trades. Not too bad. We're going to call it here, but anybody have any questions or want me to go over anything from this session? How are we feeling? How are we doing? Times 20 accounts. Yeah, no doubt. Right? But even one account, life-changing, right? If we focus on process over outcome, process over outcome. The inner stoic in you. I would have likely have waited for the first sweep and not entered your first leg on the last expansion. Can you explain again why you didn't wait for the sweep out of the SNDR? So recall that if we have, let's go over here and delete all this crap. There we are, text. So right. And we'll say we've got, just eyeball it there. So this is our midpoint of the higher time frame point of interest. This is, say, a 4-hour or 15-minute, whatever. Let's say for the purposes of this, that's 15 minutes. It's 15-minute SNDR, right? Somewhere that we're really looking forward to trading out of. There are 3 things that can happen into it. We can either tap into it, right? And leave. Either a change in order flow or something. We can trade into the midpoint of it, get a reaction out of it, right? or we can sweep it entirely. Right? And sometimes that won't even trade back down to there, right? But there's three things that we can do. Regardless, are we looking only to take a trade from the midpoint or die? No. Why? Because we're not trading patterns, right? We're not trading patterns. So what does that mean? It means that, and you guys will know this from, typically the majority of you have seen other trading disciplines where you've possibly found some limited success, or you've found different things that you've taken away from it. But if you're not consistently profitable, it means that typically you're looking for specific patterns without a full understanding of why they work when they don't. And that's kind of a retail thing where they take these head and shoulders all the time, all day, every day, right? And they get wrecked sometimes, and sometimes it works. And they just chalk it up to, well, you know, my win rate just needs to be 53%, and then I'll have a profitable trading system. No, that belief, we're throwing that belief out the window, right? Because what happens is you trade this and you get this and you get your face melted off, right? What you're looking for is the understanding of price and what it's doing, right? So number one is our structure. My Picasso coming in, right? Our structure is that we're looking for higher prices. What's the market doing? It's trading down to an area of interest to fail to go up. Our narrative is number two. I'm just going to put an N rather than put you guys through my doodling, right? Our narrative is, why is it moving down? And then why would it react from here? Or if it reacts from here, where are we going? Right? Number three is our area of interest. Points of interest. Right? We want to engage in specific zones or areas that we're looking to do business in. And then number four is your entry. Right? Number four is your entry. So when we're trading into our points of interest, we're looking for the reaction of price rather than dumping into it. So we could actually, in theory, and you guys saw this a lot last week, we could actually bounce off of here and not even trade into it, right? More often than not, and I mean the vast majority of the time, we trade into these points of interest. But what it comes down to is that, what if we're drawing them wrong, right? For example, let's look at the chart from today, right? This area, we had very high confluence in because we could see it clearly on the chart, right? We got the 1 minute, probably see something similar on the 5 minute, right? How clear is that on the 5 minute? How clear is that on the 15? We could actually, I could probably zoom it even in a little bit further on the 15 minute, right? We would have had a hell of a wick, but 15-minute fractal actually would have stopped here, which got swept anyways, right? So what's our confidence level with this zone that we've drawn out ourselves? Pretty high, right? We can identify it easily on the chart, which means that the computers and the algorithms that run the market are also identifying it easily on the chart, and they're creating one that's very easy to see, which means there's a lot of business going on there, right? Contrast that with this area here. How clear is this SNDR that we drew on this chart? Not very clear at all, right? In fact, I don't think it actually swept into it. Pretty close. But if we remove all drawings, drawings. There we go. If we took this as our higher time frame SNDR, we missed it by a tick, which is a little annoying. A couple ticks, right? A little annoying. But my point is that if we're drawing something from here, it's actually not clear at all. So I think we, 15 second. Whereabouts was that? That was, I lost the plot, haven't I? That was our first trade. Okay, so it must have been this zone here. So as I think, I don't recall who it was that said it, we have our area of interest here, which we tapped into, swept, long, swept again, right? So in theory, this is on the 15 second, this is quite a bit of our easy to spot SNDR. We have this area here that we are interested in. We've also got, not that one, this one. That here, which didn't get tapped into, right? So to answer your question, can I explain why I didn't wait for the sweep above the SNDR? It had to do with the confidence level that I had in this price movement, right? So what I look for is failure to go lower, and I characterize that by changes in order flow or reactions to candles. And with the risk of being a little bit discretionary with it, because this was a valid sweep of this low, so we're definitely interested. We didn't get the reaction we wanted right away, which led to lower prices. We didn't get our sweep. At what point do we determine that we're either missing this and not getting involved because this sweep isn't occurring, even those few points or whatever it is? We have to identify in this move when it's ready to go and it's not going lower. And we characterize that by, from this high, we had major reasons to go lower, and then we flipped here. So this change in order flow to me told me we weren't going lower. Otherwise, we would have continued on with this high, this high, this high. We would have made another high and then likely led to lower prices, and then a sweep would have also gotten us involved. Does that make sense, Christopher? Right, we're actually expecting to trade lower into here until this price action happens. Okay, cool. Any other questions for you guys before we run away for Sunday? Yeah, I'll edit the video as soon as I finish here. Or I'll at least start the process of it. It might not be rendered for a little bit because I do have a couple of meetings. You as well, Paul. Thanks for spending your Sunday with us. Okay, lads and ladies, thank you very much for your time. I appreciate all of you guys, and feel free to check out the Discord. Those of you guys that aren't premium members, we will have a live stream Thursday. Feel free to come in. We'd love to have you guys here, and appreciate all you guys. Good luck this week as well.